Well, hi there, Andrew Bell coming to you, just coming out of our southeast Queensland lockdown. Been an amazing period of time, 8 days, the harshest lockdown we've had, but it does appear that we've nipped it in the bud. There was an outbreak in Brisbane that we're concerned would spread beyond that. So fingers crossed, we're out of it. But what an amazing week we had. We ended up with 59 properties selling for the week, 59 in a lockdown. So many of the sales were to interstate people and bought using FaceTime. And even we had some situations where we couldn't go to tenant properties and we got the tenants to agree to do the FaceTime. Quite extraordinary. And 2 of those sales were via an online auction. So it really was, in terms of real estate, business as usual, even though we're in lockdown. Amazing situation. You know, I've had increasing numbers of people reaching out, wanting more information about the new high-rise development market. There are some mixed messages out there. There is clearly quite a difference in activity throughout the country. Interestingly, new apartment settlements are on track to fall by 20,000 next year to a 7-year low. Apartment settlements, which peaked at more than 40,000 in 2018, has slowed because developers were holding back bringing new projects to the market because the market was certainly slow pro-COVID. According to the National Apartment Essentials Insight 2021 report, this reflected developers' concern of a couple of years ago about the state of the real estate market, which was in the period prior to COVID-19. However, conditions have now changed dramatically, and there's a lag time to bring new high-rise development, not just to the market, but to completion, and hence the reason why we're seeing a drop in settlements. This report came out at around the same time that the peak construction forecasting body, ACIF, said that high land prices resulting from federal and state stimulus policies will drive buyers back into apartments and trigger a surge in new attached housing construction. There are real concerns that once border restrictions ease and migrants and foreign students return, there's going to be a huge demand for more housing, and in particular apartment housing. The report certainly identifies that whilst there was a sluggishness in Sydney and Melbourne markets such as the Gold Coast, Brisbane, Perth are very, very active. Of further interest is that price gains for apartments are beating those for houses in a growing number of suburbs around the country, as worsening affordability and a lack of stock in housing has pushed buyers back into the high-rise marketplace. These are predominantly owner-occupiers. An analysis by CoreLogic found that in more than 190 suburbs around the country, apartments have exceeded house price growth, with the most affluent areas posting the sharpest gains. There are a lot of downsizers taking advantage of the market conditions, selling their bigger homes and moving into apartments, so stronger demand. We're also seeing higher prices for apartments because developers are responding to the demand for increasing quality of apartments, which of course cost more money. Across the capital city markets, houses are on average 52.2% higher than unit values. And you can see why there's a shift to apartments with that big difference. A closer look at the Gold Coast market shows that approvals for new units were up 32.8% for the first 3 months of this year. This is compared to detached housing, which saw approvals actually fall by 2.9%. Now, the Gold Coast accounted for 26% of all apartment sales between 3 and 5 million across the country. Gold Coast was ahead of Brisbane, which was 22%, followed by Sydney at 21%, and that's in that price bracket. There are 2 things to bear in mind. All this activity fundamentally is off the back of owner-occupier demand. We're just starting to see the pickup in investor demand. And whilst that won't be for the luxury apartments, it will be for the general apartment market. There is still a huge demand for rental properties. We desperately need more. So the apartments are the ideal to meet the demand for those rental properties. When the borders open, the overseas investment demand is always aimed at high-rise apartments because they meet the foreign investment regulations criteria for overseas investors. So watch the apartments market. That's just going to continue to go from strength to strength. Although we have to be aware that location is a critical factor for end users and indeed overseas buyers. So I hope that provides you with a little bit more clarity about the brand new apartment market moving forward, looking pretty solid. So as always, stay safe and let's be really kind to one another. We need to support one another through these challenging times. Come to Queensland as soon as you get out because we are the great place to be. Thanks for now.